Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again in the gold market. This week fundamental analysis tells some really interesting moments. So first of all, we could say that gold market is still bullish and keeps long-term bullish context valid. It means that within the few months, maybe even longer, we could expect further upward action in the gold market. Maybe it will not be very strong and fast, but it should be gradual and because the overall background is really positive. Although the headlines and the news mostly put the gold in relation to the virus and the new cases in the United States and so on, but in fact the situation is deeper than just the virus, and a lot of more factors, the wider background, stand on the gold market. We already mentioned this in last week and previous months. So if you remember, so our background is based on a few important moments. First of all, it's extreme liquidity, so lots of money printing puts on the market. In the with the low rates, it makes the negative impact on the financial markets and supports gold. Because one deal, if you have a lot of liquidity but high interest rates, and you could put this liquidity in interest-bearing assets such as the bonds, this is one story. But then you have a lot of liquidity and you can't put it anywhere because stock market is too small to swallow this amount of new money printed. Bond market provides no interest because rate stands very low. So that makes the supportive effect in the gold. Finally, political situation stands really tricky, especially in the United States. Virus as well. So the hazard of the relapse of the pandemic still stands on the table. The probability of that diminishes, but still it exists. And all this stuff create a great background for the gold. That's the first moment that we have. Actually, it's not new. We talked about it in the last week as well. The new thing, the new factor, is that gold gradually is entering in a position of the saturated market. Because if you take a look at the net long positions on the gold, there has reached the level that was extremely top for the 2011 moment. So previously that was the record, the top high for the gold net position. It was approximately 250,000-260,000 contracts. On the pandemic background, gold increased this ultimate level for another 100,000 contracts. Now it stands approximately, the top stands around 350,000. But now is the question, what was this new top? Whether it was just outlier due to the pandemic impact, or this is new standard for the gold of the ultimate net long position. This is important because depending on that, we could see different performance on the gold market. But what is absolutely clear is that an area between the 250 and 350 area is an area of the saturation market. It means that in this condition, gold could show the rising action, but until strong resistance will stay on its way, will appear on its way. Until this resistance, it could show some climbing up. But when it meets the strong resistance, it will not be ready to break it, and moderate retracement could start. That's why currently we have the two scenarios on the gold market. Sorry guys, it's a bit long. discussion, but I just would like to give you the picture that creates the things that we really have currently on the gold market, and you should understand that. So the first scenario suggests immediate upward action and breakout of this 1820 top and upward action right to the 1920, 1950 area. That will happen in the case if the 350,000 contracts is the new beacon, the new standard for overbought level of the gold market. Conversely, if this is not so, that was the outlier, we could get healthy retracement right from here. So market could start dropping, and by our view, it could be retracement for the $200, $300 per contract. So somewhere to the 1550 area it could reach. And from that standpoint, the patterns that we have currently takes the special meaning for us, because if second scenario will start to realize, we already have some background for that. For example, on this chart, you see the butterfly. Butterflies very often becomes the part of the head and shoulders pattern, right? So, and here we should be extra careful to the moment of the potential reversal. It means that at this moment, it is unsafe to take any new long position. So if you have longs, you could keep them, just tight stop as we discussed on Friday. But this is not the point for taking the new longs. Conversely, the bears could consider possible taking some part of its total short position, maybe 30%, maybe 40%. So you could consider and think about taking the short position based on this butterfly. Because if we are right, and this will be a scenario that's market indeed turning down, shows the healthy retracement, that will start precisely from this area. That's important. Because on the monthly chart, we could get another pattern we discussed in our report. Well, so it means that for the bulls, you have to wait after either significant retracement to the downside, it will be some kind of the A, B, C, top, D pattern somewhere to the 1550, or we have to wait for the direct breakout of this top around 1825. If it will be broken, we could try to take the long position upward continuation. So that's major scenario. For the bears, in the opposite. So you can consider taking short right here, and if the hand shoulders will be formed, then you could take the short also at the top of the right arm. That's our perpetual level where we every time taking the short positions based on the hand short pattern. So that's what we have on the daily. On the intraday charts, I still think that gold should complete the XOP. That is just a normal price behavior for the market before any reversal will happen. Theoretically, bears could try to sell even in this area, but well, in this case, you will have extended stop loss order because you will have to place it anyway above the XOP. And that is more than $20 per contract. So that's an extended stop. So maybe it makes sense to wait for upward action and hitting of the XOP. Currently, it's not clear what particular pattern will be formed to complete the XOP because the butterfly that we initially suggested has not been formed. So probably market will have to form something else. But I'm really suggest that, well, for the gold market, it's very typical to complete the major targets, and since we still have here the head and shoulders, this target is not done yet. Well, I suggest that we still probably will see the breaching of the XOP before any reaction will start. On the hourly chart, I did not see something really special, so market stands at the same confidence support that we have discussed on Friday. On Friday, market has formed these minor head and shoulders because wash and rinse. This market dropped slightly below these lows, grabbing the stops here that has been placed, and return it back up. So maybe that will be the starting point of the upward action. Maybe butterfly will be formed here. So currently it's difficult to recognize what particular will happen. But if you're considering taking the short position, well, if you do not want to wait for the XOP, at least wait for some starting of the upward action, some pullback up from here. Maybe you will be able to take a position at 1810, 1815 area. That will be anyway will be better than at 1797, right? So that is what we think about the current situation on the gold and see what will happen, because currently market stands at a very important moment. So failure to break 1825, it will be a clear sign that indeed we could get the significant moderate pullback. And that will be, well, it will change the overall situation in the short-term charts on the daily and intraday charts.